Hello, traders. Cousin Benny coming to you from theclosingprint.com, February the 4th, 2024. The markets took off last week, breaking out to new highs, closing just below the call wall, with most sectors improving, ending with the New York FANG index at all-time highs. We ended the week with Meta surging on huge volume, presenting a huge problem for the bears as the New York FANG index closed at all-time highs, with breadth improving on the NASDAQ, with advanced decline bouncing, and the NASDAQ McClellan oscillator starting to turn. The black line is starting to turn up and form a trough. With growth stocks outperforming, this line is driving higher, telling you to look for growth to continue, although it is a bit extended. Value may catch up, so we'll be watching for that this week. In addition to the S&P 500 equal weight index, removing the weight of all of those big cap tech names, managed to close at the top of its range, with a number of stocks above the 50-day fading a bit, stocks above the 200-day right around 70%, giving us reason to believe we could see a follow-through, having consolidated for the past 6 weeks. At the same time, the S&P 1500 composite, S&P 500, S&P 400 mid caps, S&P 600 small caps, firmly bullish above its trend line and rising, with histogram above zero and surging on Friday with a green elder stick to end the week. S&P 500 also at all-time highs, closing just below 5,000 on Friday, above average volume, with RSI rising. The one laggard, of course, were small caps. IWM managed to hold above the 50-day, but didn't rally to new highs, as did the other major indices. Junk bonds are giving us a glimpse into the future. We're holding on to gains. We do have a triple top. RSI has been drifting lower, so we'll be watching this risk on, risk off indicator for any changes this week, especially since we saw the 10-year bounce pretty dramatically on Friday, closing up 4.4% back towards the 50 and the 200-day moving average. We really need to see this rejected and move lower if you're bullish equities, and move higher if you're bearish. For now, the 10-year and the US dollar are creating a headwind for equities. Therefore, we need to keep an eye on the US dollar and the 10-year this week as commodities take a breather. Brent crude was down all of last week, moving back down to recent lows, with gold settling back into a range. To summarize thus far, the equities look fine, closing at all-time highs, but the 10-year and the US dollar are creating a headwind to start the week on Monday. Transports, semis, communications, financials, industrials, and tech all look good for the follow-through this week, while we watch for consumer discretionary to continue this breakout above its 21-day and 50-day that started on Friday, along with retail and software to add some strength into the week. Financials and industrials look to be in play as volume continues to pick up, most likely giving us the best potential for this week after tech ripped higher. Probably going to see a little bit of profit taking. We'll be watching for that as well. Here's industrials. You can see MACD has crossed. Volume picked up on Thursday and Friday, and price action is making new highs. Look for industrials and financials to follow through this week. We have quite a few stocks from the IBD 50, stocks from the relative strength scan that are making new highs, and stocks from the rising profit estimates group, populating quite a few names that should follow through this week. CrowdStrike trying to break to new highs. We have a position in Datadog, a credit spread that is doing quite well. Looks like it's going to break higher. Volume was well above average on Friday. DoorDash also pushing a bit higher off the 21-day. And DraftKings going higher into the Super Bowl and sports betting crescendo. GigaCloud from last week, GCT, continues its bullish trend along its rising 21 and 50-day moving averages, with the company reporting the end of February, and KKR reporting this week. The stock climbing above its 21-day and pushing to new highs. Microsoft trying to break out above 415, 420 zone, while Meta, of course, caught all of the attention to end the week, Friday gapping up to new all-time highs on huge volume, with its market cap surging to 1.22 trillion, gaining 196 billion to end the week. Nvidia also closed at highs on above average volume, with semiconductors showing amazing strength. From Wednesday on, this just continued to climb, still shy of all-time highs, with some potential in semis that have yet to break out to new highs. In addition, one of the scans that we ran for the IBD rising profit estimates, there's many stocks in the group that we're looking for follow-through. We're looking for strength to continue in industrials. As you can see, there's quite a few names on this list, plus the financials. Many names look like they'll follow through. Insurance, credit card processing, and large banks, to name a few, with companies like American Express breaking out to new 52-week highs, and MasterCard reporting earnings, 52-week highs there as well, with the big banks like Wells Fargo, Morgan Stanley, Goldman Sachs, all closing near highs, with JP Morgan running along its 921-day moving averages, 50-day, 200-day, all pointing up and to the right. Just need to see a follow-through this week as financials and industrials show a lot of promise. Look at that volume on the financials. If that weren't enough, there's plenty of stocks from the IBD relative strength at new highs scan. AZEK from the consumer discretionary group, manufacturer of low maintenance and environmentally sustainable outdoor living products. This one reports this week as well, but you can see we're breaking out to 52-week highs on above average volume. MACD's turning. Maybe a day trade, but certainly would wait until after earnings. Last time around they beat with earnings growth of 133%, and no doubt with high expectations for this earnings report on the 6th of February. Abercrombie & Fitch from the casual sportswear and apparel group continues higher with remarkable earnings growth of 18,200%. Last quarter, revenue grew 20% year over year. Looking good for Abercrombie & Fitch going into this week, with a month to go before its next report. Amazon, of course, on the new highs list. Above average volume on Friday after earnings. Surging to new highs. Looks like it might follow through. I'd be looking for a flag or consolidation at this point, but if it does take off to the upside, that's telling you institutions continue to buy high and will more than likely sell higher. Amazon earnings grew 13.9% year over year, beat expectations by 14.77%, and earnings growth continues at a 381% clip going forward. A lot of the asset managers also continue to see strength. Ares Management, KKR, all pushing higher, with Colbert Craberts breaking out. Continues 921.50 and 200-day are all pointing up and to the right. MACD's turn and stochastics embedded with RSI above 70. Looking for a lot of these financial related asset managers to continue higher as well, with a large number of these stocks all making new all-time highs, following through, looking for continuation into this week as earnings continue to capture the headlines. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, Sunday, the 4th of February, with your weekend video newsletter. I'll send out a watch list of the stocks that we think has the best potential to follow through and continue higher around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check for that in your inbox. Otherwise, enjoy the rest of your weekend, take care, and we'll see you in the morning. Ciao.